All right, in this video, we're going to be going over the Pipsurfer Indicator. And the Pipsurfer Indicator was designed to give traders three things: clarity, consistency, and efficiency. Because over the years of teaching people how to trade, I understood that it's not just enough to know what you're trading. It's not just enough to have a means of doing it, but to be able to be consistent and efficient and be completely clear on what you're doing are the three main keys to being a successful trader. So Pipsurfer helps provide that. But let's go over how the trading psychology of Pipsurfer works, so that way you know where these entries are coming from. So one of the major components of all trading is called market structure. You know, you have trend, of course, and everybody knows about trend, but beyond trend, there's structure. And these are the points in the market where the market reacts to, and it reacts to in a certain pattern. So in an upward trend, you have what's called higher highs and higher lows, higher highs and higher lows. And a sideways trend, you have equal highs and equal lows. And in a downtrend, you have lower lows and lower highs. So that's what you're looking at in those particular trends. So Pipsurfer helps you to make this simple. And what I mean by that is the trading psychology of everyone. Everyone seeks to buy low and sell high, but they don't know which highs and which lows to buy and sell from. Pipsurfer helps you find the higher lows, which are the best lows to buy into here, and shows you where the lower highs are to sell from. So it'll only trade within an uptrend or a downtrend. When the market is sideways, it won't look for positions while the market is sideways, because that can confuse traders. So Pipsurfer keeps your eyes on the most efficient entries and your high probability entries in the market. So when it detects those entries, that's when it'll give you a signal to potentially get into the market. And on top of market structure and trend, you have points in the market called levels, to where price likes to react from. There's two types of levels. You have supply and demand levels, which is a lot greater and more efficient than support resistance, where a lot of beginner traders like to trade from. Supply and demand is harder to spot. And the second level of Pipsurfer, which is a high level price area, is called imbalance. Most traders, you know, there's a small percentage of people that trade. There's even a really small percentage of people that know about imbalance and are able to spot it. Even those that do know about imbalance, it is hard for them to consistently see the different imbalance levels. And for a beginner trader, or someone just watching this, just know that these levels, you don't have to know the entire trading psychology of these levels, but these levels are where your movement happens, because bigger banks and institutions, that the ones that actually can move price when they place orders, these are the levels that they play off of. So for newer traders, that level could be hard to spot. So Pipsurfer will identify your supply areas and your demand areas in a similar fashion to this. It'll look for areas where those moves are happening, those institutional moves are happening here. And at those levels, they'll identify. They won't identify just normal support resistance. And then second to that, you have what's called imbalance levels. So market will tell you where these imbalance levels are, help you identify them. So that way you don't have to miss a move that you could have missed, that you could have made if you knew exactly where they were. So this is the psychology of Pipsurfer. It's a very high level psychology. Let's take a look at it. So going right into things, let me turn on the imbalance so you can see the full indicator. There's multiple components of Pipsurfer. So like I said, we have the supply levels, which are indicated in blue here, the demand levels, which are indicated in blue here, and the supply levels, which are indicated in red, are your levels that are highlighted. And then these gray levels are considered your imbalance levels. We'll teach exactly how to maximize on the individual levels within our Pipsurfer course that you'll have access to once you get started with Pipsurfer. But notice that you have these arrows at certain places. And the reason that they're there, like think of it this way. This is the core entry, the wave entry, which is strategy number one. The strategy number one, all you're caring about is the trend, which is shown here. So you're caring about the trend of your specific time frame that you're trading on. If you have a trend that's that lines up on the higher time frame of that you're trading on, that's great too. But you're more so paying attention to the trend of the level or price of the pair that you're looking at. So you got an uptrend. The second thing, structure, the higher high. So as long as you have a higher high, these will change colors based off of if it's in an uptrend from market structure or in a downtrend. So in this, you have a higher high being formed. So within trend, higher high, and then you'll get a pullback. After that pullback, an arrow will show up that if it qualifies for our setup, and it'll let you know that this is a potential entry. So that's the rules. Within trend, on a buy, higher high in the uptrend, and then you get your arrow on that next low. That's where you want to take your entries from. It's very simple. Higher high, your next low, you get your arrow, you have a good move up. So that's the core strategy of Pipsurfer. On top of that, you'll be able to know exactly how many pips you're winning or in drawdown, and also the amount of money that you currently have open in trades on that pair, whether positive or negative. Going into the settings, just a couple settings because there's a lot in here. You'll be able to have input on one, how far, these are the main settings you'll pay attention to, how far the imbalance will calculate from. Like if you want to see about past data, you can increase this number, and how sensitive you want the market structure indicator to be. So the default setting will be 13, to make it very consistent and not go for every little low, every little high. It'll make it to where it'll catch the major moves. So that's the default settings. You probably wouldn't have to mess with anything with those, but if you want to know, those are what those settings are. So this is Pipsurfer, the indicator. The way that you would do your stop losses, we'll have a trade manager that can detect the best take profits and stop losses based off of each individual pair. But two, say you want to do it old school. Say we got into this entry, which would have came up here. Your stop loss could have been beneath that candle, beneath the low or beneath the next zone, whichever one makes more sense to you. And then for our take profits, we always shoot for a positive reward to risk. So like, for example, you have a 2-to-1 reward to risk. 2-to-1 meaning for every dollar that you're risking, you're looking to make $2. So with that type of reward to risk, you don't have to be 90, 95% accurate to be profitable. You can win with much less accuracy because you have great risk management. But this is the entire Pipsurfer indicator. And I know that with this indicator, it'll give you clarity in the markets. It'll help you understand what's happening with price. And though there's no guarantees on income, no guarantees on profit, it'll give you clarity in the markets. And that's the number one thing that helps people win in this trading space. So definitely get on with Pipsurfer. The link will be included within the description and also the setup within the next page. Get Pipsurfer. I can't wait to see you on the other side.